And again, today is September 26th, so it's Monday. And we've had a very, very busy month, obviously, in the market. And look, short version, you're here to make money, period. If you're here for any other reason, you're not going to get what you came for. So the only thing that my focus is with you guys today, again, we can go through the rules, but the rules are right here. You don't need me to go through the rules because they're super well documented. What do the trigger lines need to look like? Don't run into support or resistance, right? You guys, if you just spend a little time and go through these termination conditions, everybody's pretty familiar. If you're brand new, you're not, but termination conditions are just the support and resistance areas where the market may hold. That's it. And again, there's one question that you guys need to ask yourself at every single time you get to a key spot and you're not sure whether or not it's going to hold or not, which is where the trigger lines, if they're not below the support may hold. Is that easy enough? And it's the same thing with divergence lines over here. When you retest divergence lines on this bottom right-hand side, if you retest the divergence and get back above it, this is a big one that a lot of people really, again, there are times, this is one of my favorite rules because it allows you to be really precise with what might be a bottom. And we're going to see an example of this today, but there's also times where you can trade into a pivot stop out. And again, the difference between trading into one and not trading into one is, are you at Fibonacci support? Did you come from resistance? Do you expect it to go lower? This is a case where you reach a line and the triggers aren't below it, so you're not going to trade anymore. Knowing when to stop trading, it depends on the momentum of the market, David. You have to think of it this way. It's not a termination condition until it gets hit. And sometimes when they get hit, it keeps going. Right? So, it's not really a termination condition until the price hits, support or resistance. Does that make sense? So, if it was me, again, would you be going long into resistance? Well, again, depending on what your trigger lines are doing, you probably wouldn't be going long into it here. This is a situation. Could I use this in reverse? I'll answer your question with this. It doesn't really matter. Again, if you have a good top or good bottom from Fibonacci like this, I'll just put a couple circles on it. Everybody okay with this? You're not looking, when you're looking for a short, you're not looking at this mid band as a termination spot, right? This is the wrong spot to pick when, you're looking at either the fib, the 1-to-1, or maybe something lower. So I think this boils down, David, to chart reading. If you read the chart properly and you assess the high at resistance as a very, very good top, you're not going to see the midband as a termination condition or a line you have to worry about, probably not the fib or anything else either. And I think this is one we had Friday as well, where we were like, the 1-to-1 is the spot, but the target is actually the next fibs or the next fibs. And I go through this in the tops and bottoms video a lot. The better the top and the stronger the triggers, the farther you need to look away for your targets. So it depends, David, is the short version of that. It depends on where you're coming from, how strong are the triggers, and what else is available on the charts. Yeah, well, fibs and 1-to-1s are awesome, right? I mean, when you hit a yellow 1-to-1, you have to really pay attention to where your trigger lines are. It's always where are my triggers. If the triggers are above the 1-to-1s, they're going to hold. If they're below, it's going to break. All right. So again, look, we can go through rules, but you know, again, if you guys want somebody, especially those of you who don't have a lot of time to hang out in class to try to absorb everything that's being taught, you guys do realize that on our YouTube playlist here, again, there's a lot of obviously good stuff. But on this YouTube playlist, we've got class after class after class after class and all the videos you can watch. Probably more video than you're ever going to watch. But again, if you, you know, between the training and the live class recordings, there is probably, I don't know, 200 hours worth of, or 100 hours worth at least. So if you want just a basic class, basic education, you know, Mark's recordings here, the first 30 or 40 minutes just goes through the rules and nice and easy. I just want to do one thing. And I want to do more chart reading with you guys. And I know you guys saw the video that I did last time, right? And again, look, I just want to do something different than what Mark does, because Mark does what he does every day. So I'm trying to do something a little bit different. The last time I was in here on August 25th, so a month ago, technically, we spent a lot of time looking at our trigger lines. We spent a lot of time looking at the bar location relative to the trigger lines. Has everybody seen this video? If you haven't, it's a really good video to watch. You guys can watch it when you have time. Today, what I want to do is I want to go through some of the market replay that I did. So this is a video. And I basically started doing market replay, and I was like, you know, I need to do a good study session so I can narrate through what I see. And, you know, again, just kind of chart reading at a higher speed throughout the day. So my hope was that in going through this, you'll be able to read your charts better. And you'll feel more comfortable with what you're looking at. Does that make sense? You know, I don't want to teach you the trend trade rules. You're going to see them about 1,000 times. I wanted to go a little bit further, and I wanted to talk about just a pattern. And this is one that Janesh, you know, he told me something different, but when I started looking at it, I was like, you know, this is really, really interesting. Look, I'm going to send you guys a picture, okay? I'm going to send you about 3 or 4 pictures real quick. And just give me 2 seconds here. I'm just uploading these. We'll go through them ourselves here. And I just wanted you guys to kind of see some interesting stuff. So this first picture, let's go through it together, okay? Can everybody see this okay? I wanted to spend a little more time on the 5-1 chart, reading the 5-1 chart. Is everybody okay with that? And I've made one teeny tiny change to the 5-1 chart. And I've plotted a 13-2 reversal bar marker. Now, what does that mean? Let me show you the short version, okay? The 13-2 reversal bar marker, here's the S&P. That's this price right here. Remember how we just went over a dynamic Renko bar, and we said if you go from the midpoint and you go 13 ticks down, you'll make a new bar down, and if you go 13 ticks up, you'll make a new bar up. So we were talking about that with Omar. Everybody remember that just from a second ago? This just shows you the price at which a new bar will be made to the downside. Everybody give me a Y in the room if you understand that. So if we go 2 ticks above the last high, we'll make a new bar. And if we get to this line, we'll make a new bar to the downside. So again, with us, what are we trying to do? We're trying to buy when the market's going up, meaning up bars, and we're trying to sell when the market's going down, meaning down bars. So the only thing I did is I used the software in the synthetic fibs pro trader indicator, and I'd made time frame number 2 a 13.2 bar, but I'm not plotting anything. So all of the inputs are set to false. And I do have this template if you guys want it. And then all I did was I turned on the reversal bar marker down here at the bottom, so it would show the reversals and show the historical reversals. And I made them kind of fat with a 8 width. I figured you guys would ask. Here, let me give you a link. This is a chart template, so you guys are more than welcome to. But all you have to do is use these settings right here. So you can go in and format your own synthetic T3 Fibs Pro Trader and make these 2 sections the same, and then you'll end up with the exact same thing. Okay, so teach a man to fish kind of thing, right? You can do it yourself. Let's see. And I did do a link for you. This is a zip file. Here, I'll pin this to the top. So that's a chart template that will do what I have right here. So anyway, long story short, I said there's 2 things that I want to look for. And, you know, again, this is just a visual for you for chart reading. Okay. Are you guys okay with this? It's not your new trading plan. It's not so you can go change your whole life. It's not. I want you to visually see this, because it's a really good indication that the market may potentially continue in one direction or the other. So look, let's give it a simple name. Divergence on the 5-1 that causes a reversal bar on the 13.2 chart. Divergence on the low on the 5-1 that causes a reversal on the 13.2 chart. Is everybody okay with that? So if you have divergence true on your 5-1 and it causes a reversal bar on the 13.2, everybody give me a yes or a no. Divergence, 13.2 reversal bar, the market may continue. So look, this is going to help you with your chart reading on trend trades. So there's 2 ulterior motives. These are some extra trades that some of our more advanced clients will do, which you can, I like to teach them, and you guys can put them away in your back pocket for later. Trend trades are trend trades, and you're going to see they're really freaking easy. But it's that first one that you might make a whole lot more money with. And again, I'm just kind of giving you one of the little secrets for some of our advanced traders. Which brings me to another point. I hate to be all ADD on Monday morning, but very soon I'm going to start a second room, and it's going to be a trading room for people who have lifetime pro traders, not for demos. For people who are trading a lot of money, and people who only want to hang out and trade with other people, but they don't want somebody talking to them and giving them lessons all day long. Just a hangout room. So we'll see how it goes. I'm going to run an experiment. We'll see. But I've talked to a lot of our Nexgen users, and a lot of people are up for that, as long as there's nobody new in there, and as long as, it's not going to be for analysis or anything else. It's just going to be a hangout for Nexgen traders. Anyway. ADD. All right, I'm back. Yeah. So, and again, look, some of them don't mind hanging out in here, but, Janesh said it best last week. He said, I can't post a lot of the trades that I do because it will confuse too many of the new people. And I don't want to confuse the new people away from what's really important when you get started, which is simplicity. Does everybody understand that? Simplicity is the most important thing in the beginning, because look, you have to start making money or you're going to quit, right? So I think we can all agree, you have to start making, even if it's $100 a day. I mean, if you just make $2 grand a month, then, you know, it's not wasted time. So in the beginning, we have to keep it very simple, give you a couple trades that are kind of cherry picked and that you can make some money. But how long does it really take for you guys to say, wait a minute, there's some more chances here I should be taking, but I'm not sure how to take them? About a month, and you're like, there's something else going on here that I'm missing, right? So today, and that's a freaking long-winded good morning on this, but today we're going to go through, and I'm just going to give you something very simple that will help your visuals, and everybody understands the rules on what I'm talking about, right? So it's going to look like this. Say it out loud if you know it, okay? Divergence on the 5-1 that causes a reversal bar on the 13-2, and then you're going to do the next trade. Is that easy enough? Unless it's like really into a bad spot or something like that. Does everybody understand that? So there's three things: 5-1 chart divergence plus a 13-2 reversal, and then trade. And look, it's the same damn trade we've been teaching you since, you know, there wasn't even color TV when we started teaching this trend trade. So, you know, this is the regular old good old trend trade. Now there's some extra stuff that you're going to start to see based on the areas. So, you know, I started doing replay, and I was like, you know, I was doing replay just to test out the ideas. And I was like, you know, this is really going to be a good lesson. So you guys, this is a really good example of what you will be doing as you study every day. You can't just jump in a chat room, trade for 2 hours, and then go away and expect to be a professional trader and make $1 million. You know, I put in 6 hours of study this weekend. I know that almost everybody who makes a shit ton of money puts in a lot of hours every weekend studying, and during the week too, but you know, in the quiet time where you can really focus in on stuff. So I did a study session, and I'm just going to go forward with it. Okay. And I'm going to narrate it to you because I actually drew all of my boxes and circles as it was going live, just going forward. So again, look, I want you to see what we had here. At the bottom, we had divergence on the 5-1 chart. Yes. And then we made a reversal bar, and trigger started going up on the 13-2 chart. So this is where you're going to end up with your trend trades. Everybody see the circle here? And this is the exact same thing Mark does in class. And this is the exact same thing you guys have seen. And there's nothing new here at all. Okay. There's going to be a couple little tricks and gimmicks that I'm going to give you guys as this progresses. But again, look, you know, these are the ones that miss your large trigger lines by a little bit. And what I'm saying to you is, you know, if you're going to go a little bit early after this divergence on the low, a new 13-2 reversal bar marker, you want to be a little bit more assertive and not miss your trade. Does that make sense? You know, so you don't want to miss them, but you know, these are also the ones that, you know, they've got a nasty little ability, and crude does this a lot. S&P does this a lot too. You'll make divergence, you'll stop out the low, and then you'll have to take a second chance at it. Does that make sense? But you can't miss the first one, because if the market runs hard, you're just going to be sitting there going, oh, missed it by a tick. Does that make sense? Now, can I give you guys something else? I want you to think visual for yourself, okay? Like, you know, again, I'm just going to take a picture so I can freeze frame this for just a second. If you do take the first one a little bit more assertively because of what happened prior, does that make sense? Divergent, strong, you don't want to miss your trade, right? If you do take one that's a little before the large triggers, sometimes they get back into the large triggers, and you know, you can use a stop order or a market order after an up bar or a market flow signal to take one more attempt. Now, on almost every trend trade on the planet, and I know we had talked about this even Friday, somebody had put their stop just above the reversal bar marker. I forgot who it was on Friday. It doesn't matter. But one of the things that I said in class, just as a side note, is I'm going to force the market I do not, this is me personally, okay? So you guys can do what you want, but I do not want to get stopped out when there is no down bars on the 13.2. So I want you guys to think about this. We're talking about stop placements and where the market shouldn't go. Does that make sense? So if you get in the first time and you're saying, well, it's not the best area, maybe I'll manage tight with divergence, or I'll leave the stop where the market shouldn't go. Now you're talking about leaving your stop below the 13.2 reversal bar marker. And again, in order to do that, you either have to just say, I'm going to leave it there and hope for the best, or you have to get in, get out, get back in again. I don't know what's best for you. This is something you're going to have to work on. If you suck at getting in and out, you may just get in and leave your stop in the right spot and hope for the best. Right? And say, look, if they make divergence, I know they might stop out the low, but they're not going to stop out the 13.2 reversal bar. So I'll leave it a 2 or 3 ticks below it and hope for the best. Give you any ideas? Anyway, I just want you to visually, and that's the reason why I posted this 13.2 reversal bar marker on the 5-1 chart, so you can have a visual as we're going through this these charts together. Okay. And again, I'm not going to do orders on this replay. I just decided I'm going to do boxes and circles because it gives us a lot better chance to, and again, this is the spot where an up bar, market flow signal, stop yourself back into your position. Does it look better now when you see this strong trigger line? And again, every time you get a divergence, just think we're going to stop out the last low and then we're going to finish the move. Unless we make a down bar on the 13.2 chart, and then we're going to go back to that pattern we were talking about earlier, right? Which is going to, give us, this divergence, 13.2 reversal bar marker. We're not going to go short anymore. Anyway, with very rare exception. All right. So is everybody cool with this? I want you to stop me dead in my tracks because I'm just going to let this market replay go forward. I think I had it like 10 or 15, 20 times speed. And we're just doing market replay together. We're studying together. And again, you have to think Fibonacci targets are where we're going with this, right? I know a lot of you guys like 10 ticks and then break even, and that's fine maybe on some that are a little more assertive. But, again, for me, I like 20 ticks. My checklist has 20 and 30 ticks in it. Anyway, David, I'm sure it's beautiful. So look, when we get to a Fibonacci area, this is what we were talking about in our rules when we were talking about termination conditions. And again, we won't have to go through it too much, but when we talk about tops and bottoms and termination conditions, any Fibonacci area that may reverse the market based on the fibs and the triggers, strength and location. So you guys have to answer this question. And again, I'll go through this a hell of a lot faster as we get going, but I just want you to answer the question real quick. How many triggers are above these red lines and yellow dots? I know they're up, but how many triggers are above them? 0. So that's a termination condition, right? Multiple fibs, yellow dots, that's a termination condition. I want you to also recognize, what do you have over here on your 5-1 chart? You have divergence. So remember what we said, if we have divergence on our 5-1 chart, what's the next thing we're going to look for? We're going to start looking for down bars on the 13.2 chart. Right? If a top holds and then everything rolls over, we'll start looking for shorts. Does that sound familiar? All right, I'm going to go forward with this video here. And again, look, when we hit termination, which I drew, for me, look, tops or bottoms, I draw boxes. Potential trades, I draw circles. What about this, Abdul? Let's take a look. Yeah, and that's okay. I think that's a good idea, Abdul. I like it. I think the only thing different is if nothing condition changes, you'll take a second entry. What changed over here? Look, and again, look, I appreciate you stopping us dead cold in the middle of it, because this is what the class is really about. If you guys have questions. Here, I'm going to blow up your picture here, Abdul, real quick. Let's do that this way. So look, what changed over here? Did anything change? You have to say to yourself, this is a strong trigger line look that I will be more upset if it reaches resistance without me than I would if I lose 10 ticks. I mean, that's basically what we say, right? When we're going to place a trade. I'd rather lose 10 ticks than miss the move. So you have to gauge, if you're going to get out, why would you not get back in? So nothing has changed. And we basically just got inside of the large triggers, right? So is it worth it, 30 or 40 ticks worth to take a second trade? And it's okay if you get in and then you manage. This is where most new traders miss all the money. They said, oh, thank God I'm out and I no longer have the stress of being in a trade. Do you say that to yourself? You're like, oh, I'm in. Oh, thank God I got out because it went lower than the low. So thank God I was getting out. And you're so relieved to be de-stressed that you forget to get the rest of the move. Right? That's what I was telling David earlier about his trade. I said, you missed the second trend trade. And it's the same. Let's see. I think let me pull up his trade, but no, that wasn't it. It wasn't David. It was Dennis, I think. I was like, Dennis, you missed the second one. And this is the result of being so happy that you hit your first target that you lose your edge and you forget to take the second one when the conditions are still true. So, and it's the same thing, I think, Abdul, with yours. And I don't mean to be ultra long-winded about this, but I think you're so relieved to get out that you forget to take the rest of it. And that comes with time. It's okay. You have to see this enough times to make it to where you're like, okay, that's the one I should take a second shot. So hopefully that's helpful for you guys. All right. So look, let's go through these conditions again. What happened? Edge of fibs, termination, divergence on the 5-1. That's right. Down bars, right? And again, we have to decide, do we want to go short? Now, this is one, when you were asking the question earlier, who was it that was asking? How far away from a termination is too close? And look, you technically hit a blue fib, yes, at 83.24. The question is, how strong is that fib going to hold after that good of a top? Can you trade into that fib? Well, let's read our triggers on the 5-1 chart and see if we start to get some early indication. So you remember what I said? We're basically, look, I'm going to give you guys the secret, okay? I'm going to give you the answer. Should you take another trade and try one assertively? Okay. Here's the answer. Just say yes every time, and you'll be right 8 out of 10. Just say yes. It's like the opposite of Nancy. Instead of just say no, just say yes. So if you have divergence and you start to make down bars, are you going to look to sell resistance? Now, what trade is that, guys? It's not a trend trade yet. Right now, again, look, can I pull up this picture? Can everybody see this picture okay? This is where we define a good top, and then we're trying to, this is an HVA trade, of course, right? But we're not going to watch the market flow in this lesson. So we need another way to get in at the top. So do you guys remember last week I told you could use a pivot stop out, you could use a momentum, you could use something different other than an HVA line, but the rules are still going to be true. The quality of the termination at number one at the top is very important. And then again, for what we were talking about today, divergence on the 5-1 coupled with strong triggers and a breakout on the 5-1 chart. So as I go forward with this, the question is, should we go short after a good top and everything rolls over? Because look, you have to see your short trade coming in advance in order to get paid, right? Just like we saw the long trades coming and we knew where it was probably going to go. You have to say to yourself, if we pull back to 83.18 to 23, am I going short? Now, remember what else I said? You really don't need anything more than a few ticks above the 13.2 reversal bar marker as a max stop. So we kind of know where the window is. And everybody agree with this one? This is literally super, super traditional termination, strong triggers, perfect trend trade. I mean, that's pretty much the 99%er right there for us. It doesn't win 99%, but we'll take it 99% of the time. The only one we'd miss is if it was too fast for us to get. So everybody see it? This is the spot. And again, I drew these circles in as it was going, doing the replay. So I figured I wouldn't have to do any work today. I'd just sit here and talk. So I drew the circle in, and again, where are we going, guys? A good top with strong triggers. Are we going to the first fib or the last fib? But remember when I said you don't always have to just look at the first fib, you can look at where the second or third fib is too. You know, if you usually get to the second area, you've done really, really well. So don't just look at the first target, look at the second target at the same time. So give me some numbers. Let's say you're in at 18, give or take. Everybody fair? Is that a fair assumption? 83.18, so 98 is 20 ticks, right? And then if you go to 88, that makes it 30 ticks. So, and that's what I like. I like 20 and 30 ticks as kind of a beginning. You know, if you've got a really, really good trade, making 10 sucks, I think. You know, it's just me personally, but everybody has to have their own opinions. All right, so we're going forward. Everybody cool with this? This is really freaking easy. I mean, that's the easiest trend trade on the planet. And again, that's our first target right there, right? Yeah, and the 13.2 did not make a good bottom before, and that's when it goes and finishes the business. Good call, Jeremy. It's a lot of information for new people, but I'm trying to keep it simple. We had a top with divergence. We made down bars on the 13.2 chart. Find a trade. All right, Jeremy. This is Friday. I was doing a study session with everybody. Excuse me. I was doing a study session. So again, you can kind of see, you know, thought process. You don't have to trade to study. Right? I mean, trading is nice, but you could draw circles to study. Placing a trade is just, it's harder drawing circles than it is placing trades. But you want to give yourself boxes and windows, boxes and circles. I like boxes where there's a top or bottom and a circle where there's a potential trade. All right. So look, we made two divergences down here at the bottom. What does that mean, guys? What normally happens when we make a couple divergences? We're going back up some, right? So if you were short from 83.18 and it got down to 72, 73, 74, 75, I mean, you're talking 35 ticks. That's a pretty good chunk for one trade, right? And then you have to say to yourself, where is, again, look, 96 is kind of the upper end of the window. So whenever there's two divergences, usually you stop out, and then you have one more continuation. So the mid band's at 90 and the upper end of the window is at like 95, 96. Everybody okay with this? So look, that's the upper end of the window. Do you want to go short at 96 at the fibs, thinking that we might get to 64? Again, this is like 3 o'clock in the morning. So, this is not a high probability trend trade. Can we all agree with this? This is no longer a trend trade. This is I hope the edges hold type trade. And again, look, I want you to see the difference here. Now, we're going to focus in on one thing, and it's going to be repetitive. You're going to get so freaking tired of this today, but then you're going to say, damn, why didn't I notice this sooner? What do you now see on the 5-1 chart? Divergence. Whenever you have divergence on the 5-1 chart, look what it's coupled with right here. Haven't you guys heard Mark talk about this so many times? If you have your mid band and your large triggers are far away, isn't that the look that generally makes the market go back down? So while we had fibs here, now we have fibs and divergence. I want you to see the difference. The divergence makes the difference, and the triggers rolling down makes a difference too. So, this is a look where traditionally we're going to end up finally finishing the move down to the fibs. Everybody see how the mid band over here and the divergence over here was a better thought process for going down again than maybe just at the fib. And if you got at the fib, the divergence took you out. So divergence helping your cause. All right. So now what do you see? This is very simple, right? You don't need my help on this one, do you? Trend trade short. Everybody agree? So again, if you go back, we had trend trade longs, we had trend trade short, we had a mid band with divergence that held, and now we've got 82.63, high probability trend trade, absolutely. Again, where should it not go? Remember what we talked about the 13.2 reversal bar marker? And they do this a lot early morning, pre-market and stuff. You see how, if you had this divergence, you would probably get out of your position. But I want you to, here, I'm going to pause this. Look at this chart. Abdul will ask you the same question. What changed? We wanted to go short at 62. What changed? Anything? Sometimes you have to do a trade twice, or sometimes you leave your bigger stop in. And again, look, in a strong downtrending market with major fibs and strong triggers down, this is where sometimes I'll force them to make up bars on the 13.2 chart to get me. Just, again, under what situation will you do that? And again, when you start thinking of 60 down to 30 or beyond, that's a lot of money to be had for just a few extra ticks risk. Anyway, food for thought. And again, sometimes they run that stop and then they go down again. Now, you're also going to notice the same thing we talked about before. Divergence made the mid-band go down. Divergence makes the fibs go down. Not that they couldn't go down anyway, but if you got bumped, you have to be willing to do a second trade. Does that make sense? And it's okay to get bumped. You have to choose. Do you want to go hide it behind the 13.2 reversal bar marker? Or would you rather get bumped and take a second signal? It's not for me to tell you what you should or should not be doing. All right. So look, another trend trade. Sorry. I was drawing that. And again, look, now we're getting to the point where the triggers are getting a little bit more squeezed down here at the bottom. Now I want you to think about something else here. You know, and again, I'm not saying you have to stay in or get out, or I'm not telling you what to do. I'm just telling you, you guys know this look, right? Where you start to lose momentum on your triggers. And again, you have to decide whether you're going to manage and then take another signal, or whether you're going to hold on for dear life. Again, look, I want you to think about your 13.2 reversal bar marker and how far away it is. Can I just say one more thing about stop management? This would be insane to get in here and leave a stop behind your 13.2 reversal bar marker. That's not the right time to do that trick. I know if I say that trick, people will be like, oh, you said put it behind a 13.2 bar and I'll be safe. People make shit up like that all the time. Oh, you said I'd be safe. No. If the 13.2 reversal bar marker is with very wide triggers and a fib, and it's not very far away from your entry, you can be okay with it. It's inside of the risk parameters. Does that make sense? If you get in at 32 or 34 and you put your stop at 55 and say, oh, I was just getting it out of the way, it's not a good use. It has to be close. Does that make sense? When we're done, Andre, so 1 p.m. Eastern, give or take, it'll be up on YouTube. Anyway, all right, we're going to go forward. I'm just saying you don't want to risk all that money. If there's a big gap there, it's just too much. It's okay to stay short or do a second trade if that's in your trading plan, but you don't want to get too crazy with that 13.2 reversal bar marker stop idea, okay? Absolutely, Andre. Enjoy. I say work is a 4-letter word. Do this as well as can be done, and you won't need that 4-letter word anymore. That's the trick. All right, guys. So again, look, now we're getting to a point. You see how this reversal bar marker is getting closer to the fibs? We shouldn't really take it out if we're going to keep going down. The challenge is we don't have a trend trade anymore, do we? We're kind of on the wrong side of the trigger lines. So again, this is where perhaps the market flow comes in handy. If there was, a reason to go short, it'd be different. Without a good reason to go short, again, I want you to now take a look at what we've got on our charts. What do you guys see? And again, we kind of knew this. Remember in the beginning, we were talking about this. We knew that we were going to have weak triggers at the bottom, and now we've got divergence on the big chart. So again, we're not going short anymore, right? Everybody okay with that? Again, it's really tempting to go short above all the trigger lines, but it's not the right thing to do. We want to do them at the trigger lines. All right, can we go long? Again, look, I'm going to ask questions, and you guys, so look, if we've got divergence and the triggers are going up, can you go long after the midband holds? So Ray says no, Ben says yes. All right. So you guys remember in Mark's version of his little checklist or plan, he says, let me see if, let's see if I can find this stuff here. So do you see right down here? Let's see, how the hell do I work this? Anyway, he says on 50-50 trades, no divergence needs to be present on the 5-1 chart. What he's referring to is when we look at these charts again, do you see up here on the 5-1 chart? So right up here, there's no why is that not working? Right up here, there's no divergence. I mean, something's stuck. Hang on. Let me close out of this silly thing. Something's stuck on me. I don't know what it is. Maybe it'll free itself up. Anyway, let's go forward. Okay. So again, God dang it. I am straight up stuck. Well, shoot. All right. Hang on. Anyway, I just want you to see the pattern. Support, divergence, a higher divergence. What are the chances we go up? And again, these are the spots where, you ask yourself a question. Is it worth it to take a trade from a spot like this, from the large triggers or mid bands, and, giving yourself a little extra room to say, hey, I'll take a trade if. Is it good enough at the bottom to do it or not? This one's iffy. What new indicator? No, it just plots the 13.2 reversal bar marker on your chart, Jeremy. So you can turn that on yourself if you want. I posted a picture up above on how to do that. All right. So again, look, I want you guys to read your chart. Remember our little session that we had last time? Where are the price bars in relationship to the small triggers over here? They're above it, right? So we have divergence, 2 ticks off of support, which is pretty damn close. Price bars are above our triggers. We have divergence, and a third divergence. Is it worth it to take a long trade or not yet? Again, these are all bullish things that, you're going to start to get some of our more advanced traders are going to take some of these trades in an effort. This is also where the high volume line trade comes in. If you guys remember this picture that we talked about, which again, I know we're not doing market flow in this, but again, the same thought process is true. If you have a bottom, how good is the bottom? And then do you have a lot of divergences and triggers rolling and small charts rolling first? Usually the small charts are going to roll out of the top or bottom first, right? Trend trades are after the large chart rolls out of a top or bottom. So high volume area trades, market flow trades, or maybe, something else on the smaller chart is more after a good top or bottom. All right, we'll just watch it together. Okay, here. I'm going to let this go because I've got like an hour and 20 minutes worth still at least. So I'm not going to stop it anymore unless you guys want me to stop it, okay? The chart read should be up and nothing but up. Multiple divergences from support, up bars on the 13.2 chart, up, up, up. And again, look, if you were waiting for a trend trade, you just now got to one, right? So again, the mid band is traditionally our first target. Can I show you guys something? I like going back in history because the more you see the same thing, the more you say, wow, I got it. Let's see. I'm going to show you a picture. And if you've been around, you know what picture I'm about to show you. Let's see. Where did I put the darn thing? Okay. In 2004, which for you guys would be 18 years ago, right? Our trading plan was hit a fib, have divergence, buy or sell a pullback to the triggers after they roll. Stop past the high. Does everybody understand this trade? And I'm talking 18 years ago. Fibs with divergence, buy or sell a pullback to the triggers after they roll, and the mid band's the first target. That's pretty straightforward, right? So when we look at this video, isn't that the same trade over here? We had divergence from a fib, the small trigger lines roll, you buy a pullback to them, and then the mid band is the first target. Now, is there anywhere on your smaller chart where you could take advantage of that knowledge inside of the small triggers over here? I bet there is. Anyway, I know if you're waiting for a trend trade, you're like, okay, whoo, I finally got to a trend trade. But again, you're missing a lot of the money that our software makes available to you. So we're going to go through it now on chart reading, and then you're going to go back and study it later. All right. Now, here's the question. Obviously, there's a trend trade here, so it's so obvious. We'll mark it up here in just a second. Is this mid band going to hold? That's always the question that scares the crap out of all the new traders, right? Oh, the mid band might hold. If there's no divergence, you take it, and if there is divergence, it'll hold. Did you guys get that? If there's no divergence, you take one, and if there is divergence, the mid band will hold. Sometimes it doesn't hold right away, but it'll hold after divergence on the 5-1 chart. Everybody put a wire in the room if you understood what I said. I'm going to take a picture of it, and we'll write it out. Because again, this is one that scares a lot of people. So I just want to make sure that, let's see. That's not working. All right. So look, is the mid band going to hold? I'll spell it out for you. No divergence, it won't hold. If divergence becomes true later, it will hold. Does that make sense? So if you go long, that means you have to manage because you ran into a line that might hold. Does that make sense? All right, we'll watch it. Let's go forward. So that's your long. Everybody agrees? 74, 75, 76. Now, what's the other thing you notice about your large triggers over here? See how far they are away from the mid band? Again, it's not that you can't take one. You just can't hang on to this for dear life or you're going to lose all your money. So when divergence is true, you'd be out, which would happen, in 2 more ticks. And you don't have to put your stop down here below the reversal bar marker because they're going to get you. There, I drew it in. Okay, when I was doing replay, I said, okay, when is that mid band going to hold? So remember the other pattern I was telling you guys to keep your mind out for? Divergence on the 5-1 that causes 13-2 reversal bar markers, and then we're going to use it to get an extra trade in. So your trend trade was there. That was fine. There's nothing wrong with that. The divergence caused the market to go down from the mid band. And now we've get this spot right here. And again, this is a non-traditional trend trade, but the question is, can you go short here, anticipating maybe the rest of the move down? And I think I drew this in here. I'll keep the video going, but I think I drew it in where I highlighted the divergence, the 13-2 reversal bar marker down bars, triggers below. So there's the spot where the mid band holds. There's the spot where we make down bars on the 13-2 chart. So can we go short? Now you have to ask yourself the question, Look, this is the same thing that happened at the midband. Could you take one? Yes. Should you stay in if there's divergence against you? No. So whenever you're doing these kind of momentum style or extra little trades that are a little bit off from a high probability trend trade, you may say to yourself, divergence, strong triggers, I'll take it. But if divergence becomes true, I'll get out of it, because the large chart is not that great for hold on for dear life. Does that make sense? If it was all down, it'd be different, but the large triggers are up and the small triggers are above them. So you might take it, but you might also be quick to get to break even and quick to take some profit. Does that make sense? And what you're going to find, and this is the tricky one, whenever you have divergence and your large triggers aren't right, you're not going short anymore. Or you can go short, but usually you need a pretty strong signal. So it's the question mark short that is managed out with a question mark divergence. Does that make sense? And then we just resume the uptrend. You know, remember when we were buying 76 over here? This is kind of a resumption of the uptrend when you have divergence, strong move up. Anyway, it's hard to see. It's not a perfect trend trade yet, but you can kind of see the chart reading, right? Two divergences on your 13-2 chart. Large triggers are up on your 13-2 chart. You have divergence on the low. You make 13-2 bars up. What if you were to buy 73 and see what happens? I know it's not a trend trade. It's a momentum trade recognizing a bottom. Does that make sense? And it might not be your trade right now, but you can put it in your back pocket for later as you gain more experience with the software. So we're basically trading the 5-1 chart after two higher divergences on the 13-2. Being a little more assertive. You guys remember we had a couple of these on Friday, I think. And look, sometimes they give them to you, sometimes they don't. But, you know, the thought process is we're going to go from blue Fibonacci support up to Fibonacci resistance. Essentially, look, this first trend trade that you got screwed out of is the same trade over here, literally, but the triggers are even better over here. Smalls going up, nice and easy, short-term momentum up. Make sense? It's the same trade as before. It's just finishing what it didn't finish the first time. All right, if you get to fibs, what do? You assess, again, trigger lines and divergences. So we'll see what happens. Again, that's a pretty easy 25 ticks right there. $500 on a 2-lot goes a long way. I know you guys are posting in pigs, so I'll come back and look at them in a minute. All right, so look, we hit fibs, we have divergence. What are we going to watch for? Down bars on the 13-2 chart kind of solidify the thought that we might be going down. Again, can you go short into support? That's a question for you. You know, hopefully I'll put some question marks on this. Can you go short into support when your triggers are down strong coming off a resistance? All right, Gary, what's a furnace? Living in Florida. So if there's no divergence on the low, you'll take one shot at it. All right, KR. That's a time-tested method, isn't it? So does everybody see the relationship on your small chart? Divergence on the small chart followed by down bars on the 13-2 chart. Now, this is the case where, again, you'd probably want to manage this one a little bit tighter because it's not a perfect trend trade, but that's a pretty damn good trade, right? If you're at a half right here, don't you think? And then hopefully we make it down to Fibonacci support. That's the ultimate goal. So you have to decide, did anything change? Do you want to get out? Do you want to ride it out? Do you want to put your stop above the 13.2 reversal bar marker? Did anything fundamentally change in your idea of going short here? Now, if you took half, got to break even, you can always do that second trade, right? Again, I want to stop this right here. Look at the 13.2 chart only. What do you see? They just got up to the reversal bar marker and then they're going down again, right? Look at the small triggers. Look at the large triggers. The question is, would you do another trade if you got in, took half, got bumped, or got stopped out? Would you do another trade short with this 13.2 look? Hell yeah. This is where the market flow signal, we actually had one there. And I was like going to introduce that too, but I was like, that's too much. Anyway, there was a market flow signal here that said go short. And the 13.2 chart agrees with it. So, you know, these are ones where you don't want to try to go long on the little chart. You're still in a short mode on the large chart. And then hopefully we get down to 49, you know, get down to the support. You guys have seen this picture a lot, haven't you? This happens a lot. You go short on that first one and it's not quite perfect. And then divergence tightens everything up. And then you have to go short a second time. Abdul, that was your picture from earlier. Same thing. In early, manage early. Then you get the best spot and then you get a better chance at it. And then that's about the end of that. All right. Look at your large chart. Is this the look for going long? Now, remember what KR said. No, Ray, if there's divergence, don't do it. If there's no divergence, go ahead and do it. Mark's got that in his plan. I've got it in my plan. KR's got it in his plan. We don't have to get too tricky with it. If on 50-50 trades where you're not quite sure, no divergence should be present on the 5-1. Does that make it easy? So look, if there's divergence present, probably not the best shot. Does that make sense, Ray? Because this divergence is going to make this midband hold, probably. This divergence makes this midband hold. The same way it did it earlier. This divergence on the 5-1 makes this midband hold. Have you guys ever thought of it like that before? So you have this midband here on the large chart, which is with the divergence on the 5-1 chart, which is going to make you say no to long trades. If there was no divergence, you'd probably do one. No, I wouldn't do a trade when there's divergence on top of it. Number one, we don't have a good bottom. We didn't make it to the fibs. The triggers are still below everything. Divergence is going to make it go lower. So all I was saying is it's not a long trade on your little chart. If we were coming from a fib, Michael, then yeah, we'd take a shot at a long trade. But since we didn't come from large fibs on the large chart, it's the sucker. That's the sucker long trade right there, where you get suckered into doing it and you shouldn't. So if you can't go long, can you go short? Well, Jose, can I give you something better? That's not really much of a divergence. How about a divergence on your 13.2 chart on the high, a divergence on your 5-1 chart on the high, and then your triggers going down at resistance to get to and finish the move down to the fib. So now the short-term charts and the long-term charts all agree that we're going down again. So quit trying to look for longs when everything is going down and look for shorts after everything agrees again. So we'll see. But see, this is one where most of our more experienced traders with no divergence on the low are going to take a shot at going short. Remember the pattern we discussed earlier too? Divergence, down bars on the 13-2 chart, no divergence on the low. What do you think is going to happen? Fib resistance to fib support. Watch. Now, it doesn't have to go, but usually with divergence on both the 13-2 and the 5-1 chart, it will. Has anything changed? If anything, it's gotten better for a short because all of your triggers are down. So you're more of a traditional trend trade look when everything's going your way now, right? So anything below 81.74 is your traditional trend trade look. Everybody agree? Divergence just makes a pivot stop out. Nothing has changed. And then now we made it to a fib. And then we ripped the fib. All right, so just to freeze this, look, divergence on the large chart, divergence on the small chart, selling resistance when the triggers are going down. That's the continuation kind of look, isn't it? And then this is more of your traditional trend trade look right here. But it all said the same thing, that it was going down. Yeah, and after they rolled over where that third dot is, Ray, they were all going down. So that's your traditional trend trade at your third dot. But we recognize that it was going down at the first dot. Does that make sense? So our chart reading was early and then the trade was a little bit later. And this is where, you know, in the beginning, you're going to take trend trades only as a new user, and you're going to wait for everything to be going your way. And what you'll find is, and again, look, this is another trend trade right here, right? So mid bands and large triggers. I have a box, but there's your circle. So this is another trend trade with everything screaming to the downside. Everybody agree? I mean, that's the mother lode of going down, and we've got a long way to go. So the target's 80.95. So you're talking 45 ticks of profit. Now, you don't always get 45 ticks, but again, when the market's giving, sometimes it's really nice and it gives you all the way to the fibs. It's only 6:30 in the morning, guys. You could easily be done for the day at 6:30 in the morning if you had the wherewithal to get up again. Not your day today? All right, Ed. We'll take a look at your trades in a little bit here. Are you following the checklist perfectly? Good tops, good bottoms, and then strong triggers and getting in at the best spot? All right, has anything changed on the large chart? And again, this is one where if you go, ooh, 3 divergences, I'm so happy to get out. You're like, God dang it. Right? Again, sometimes I'll ignore that, you know, third divergence if we're in the mother lode of all strong situations. So again, that's the difference between 45 ticks and no money on that one. All right, that was a big, big move. Pre-market. I say pre-market, but it's not really pre-market. The London market opens at 9:30. All right, so I want you to recognize something. Do we have, again, look, line in the sand at the reversal bar marker and 1-to-1s, yes? That's the last spot. If it has to stay below it. So we had divergence going into that. So it makes it really difficult to take that one more short. If you did take it against the reversal bar marker, you know, with market flow or something, again, there's your next target. Again, these strong one-way moves are really nice. Now, what do you notice on your small charts? 2 divergences, and your triggers are no longer good, right? So what are we going to look for? Remember that pattern I told you to watch out for? Divergence on the low, strong move that gives us up bars on the 13-2 chart. Again, I wouldn't be going short anymore here because the triggers are crossed up. The last circle, maybe because they're down, but here we're probably going up. Everybody agree with that? Just looking at the small triggers. I mean, it didn't have to go up, but 2 higher divergences. Now we're going to watch for up bars on the 13-2 chart, which should solidify the bottom for us. So look, divergence on the big chart solidifies the bottom. We should go up, yes? And again, we started to read that at the bottom, and then the second higher up divergence, we saw it. And then obviously, you know, getting up to the fibs is the objective. If there's a trend trade that happens, great. If not, well, that's it. All right. Everybody agree. Termination with divergence on the small chart, no more longs. Everybody agree? Fibs, divergence on the small chart, no more long trades. All right. So I want you to watch the small chart and tell me when I can go short. You guys remember the pattern I told you about as a bare bones minimum? Fibs with divergence, start making down bars on your smaller chart, your larger chart. Now, I was telling somebody earlier, it depends on where you come from. How would you guys classify the mid bands and resistance in a strong downtrend as far as areas go? That's a pretty good area, don't you think? Anyway, that's the type of area where, you know, some of our traders will be a little more assertive on the smaller charts if they get an opportunity. And maybe it happens, maybe it doesn't. But we're not going long because of the fibs. Everybody okay with that? And it bounced up a little bit from the mid band, which is, you know, kind of expected. But what are you going to get? Same thing we got on the way up. 2 lower divergences, and then, you know, I'm drawing the arrow here to watch for down bars on the 13-2 chart, which will kind of solidify the top. And it's not a top yet because, again, we got to start making those down bars on, you know, we already know that we made a top. The question is, when can we go short? Right? Again, now we're starting to make down bars on our smaller chart. So here's the question. After a really good top, can we be a little more assertive on our smaller charts? So again, this is where, you know, some of our more advanced traders will be looking for high volume areas, right? So if there's a high volume area up here, or there's another reason on the market flow up here, but just the small charts pretty much agree, don't they? All the charts agree. We made a good top. Things are kind of giving way. We'll probably pull back to 73 to 75, and then we'll see what happens. Mid-band is the only resistance on the 5-1 chart right now, so see what happens. Now, this is not a traditional trend trade. Everybody agree? This would be more in the tops and bottoms type range where, you know it's a good top, and then the market flow may help you out. Everybody okay with this? It's not a trade per the, you know, high probability trend trade, but if there's a reason there because of the configuration at the top, anyway, you guys tell me what you think about it. Just because you have divergence on the low doesn't mean you're not going to take a trend trade, right? The only time divergence on the low is an issue if it's 50-50 or some other type of iffy trade. So I'm glad you said that, Ray, because it's very important. You said divergence on the small chart, so it's probably going to hold. No, it's not. Right. So this is where you guys would take your checklist and, you know, again, look here, we'll go back to some basics here. You guys would take your checklist for a trend trade and you would ask yourself these questions. Is the market coming from a good top or bottom? Hell yeah, it is. Right. Do we have odds favorable triggers on the 13-2 chart? Hell yeah, we do. Oh, okay. Sorry. Yeah, you're right, Ray. Cool. Do we have odds favorable on the rate range? Yes, probably. No terminations on the 13-2. Do we have an area inside of large triggers for a short? Yes, we do. So this is just a straight traditional trend trade. The cool part about it is if you are really comfortable in reading the areas, this ends up being your first short where that big pink arrow is. And look, it's a free $500 on a 2-lot. No divergence on the low. Small triggers are going down below it, coming off of a good top. Free 500 for anybody who's willing to take that trade. You guys got that? So, you know, this is more of an HVA or momentum after the top. Does that make sense? I'll give you guys a picture of this just so you can have one. It's not your traditional trade, but you're using your fibs, right? And you're not being so puckered up that you can't just relax a little bit and do what the charts say. Takes a while. You'll get there. Don't worry, I promise. But if nobody points it out to you, you're not going to recognize it. You know what I mean? So quality of the top, maybe you take one extra. Anyway, all right, let's go forward. Is this helpful for you guys, just walking through charts like this? Again, we want to go short in this situation, don't we? 80, 60, give or take. We want to go short. This is perfect for us. This is a good spot where, you know, you guys tell me, initial stop would be above this white 13-2 reversal bar marker. So it's like, screw y'all. You're not going to get me with a little pivot stop out like that. This is where they got to work to come get your money. Sold a white bar there? I bet you did. Market flow probably, I was watching the market flow at the same time. The market flow is very good in line with this. But look, you don't need the market flow to see it. Fibs, divergence from the top, you know, one momentum from the mid-band, trend trade from the mid-band and triggers. All right, now I'll stop it right here. What do you see over here? Do you see a pivot stop out of a divergence line? I want you to answer the question, are we going to get a divergence over here? If we get a divergence over here on the 5-1 chart, this divergence line is going to work more. Do you guys get what I said? I said this earlier at the mid-band, and it's the same true of the fib at the top. This divergence on the 5-1 is going to make this fib hold better. This divergence on the 5-1 is going to make this pivot stop out more powerful. If there was no divergence, we would do another trade. If there is divergence, this is where maybe you wait for a market flow signal or you don't get a trade at all. So look, this is now after the fact, but do you see it? Pivot stop out plus this divergence makes this pivot stop out a good termination. Is that helpful? Oh yeah, it is. I know it's helpful. That was rhetorical. All right. So if we get a termination and divergences on both charts and we start making up bars, can we go long with a momentum from the midband again? Somewhere between the midband and large triggers? This one's iffy because look at your large chart. Do you really want to go long with your large triggers going straight down? Did you really come from a good enough bottom to make it worthwhile? What do you think? That doesn't look like I want to go long again with a momentum over here. Do you guys see the difference? Up here at the top, we had such a well-defined resistance and multiple divergences, and everything was saying yes, 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 yes. And over here, it's kind of like, we didn't get to a fib and the triggers are still down. And that's not really the time to take a momentum trade. Not saying it can't work, but it's not the one that you want to risk your hard-earned cash on usually. You see the difference? If you don't, you can go back and study this video when it's all over and watch it again. It's a lot of information in here today, guys. And if you're new, you're probably like, holy cow. But look, this trend trade you're going to get as a new user, easy. It's these extra trades, right? Should you go long over here? That's the question mark. I moved it over. And again, it's probably going to bounce up, but it's not going to be a really good long trade, would be my guess. Just because of the large triggers and the strength to the downside on the big chart. Usually the big chart wins out. We'll see. All right. We'll roll it forward and see what happens. And look, even if you did buy a little momentum there, you have a chance to manage it at least. I mean, you kind of ran into one-to-ones with divergence there. All right, so watch. Remember what I said earlier. This divergence, this negative 62, is going to make these large triggers work again. Does that make sense? This divergence made this fib work. This divergence made this pivot stop out work. This divergence is going to make these large triggers work. Did you guys have an aha moment? Now, I'm not saying, we're not going to necessarily go short right there. That's not our short look by any stretch of the imagination. It's an up look, if anything else, right? So we're kind of stuck here is really what the point of it is. Again, you're not going short, probably not going long. These are the situations where you have to kind of wait out the market because you end up guessing. And then, all of a sudden you're like, oh, I'm trying to guess long or short. And again, there's not a trade to be had in here. We're just chart reading. Okay. And this is what, 7:23 in the morning. So, the traders who had been trading since 3 o'clock in the morning, the London session, they had a really busy morning, didn't they? I mean, those guys, if you did it right, you probably made a whole day's worth plus, plus, plus. So, again, this is where, before the American Open at 9 o'clock, which is not technically true. It's open all the time now, but all right. Now, sorry, hang on, let me stop this. I did put this in here because everything has rolled up at this point. Again, let me back that up. I kind of missed it here. Again, everything is rolled up on the small charts. And again, we're failing to go to the downside. The question is, would you take a long trade at this point? At some point, you have to say, all right, the small chart's going to win out. Not high probability, but it's a little bit better anyway. You see what I'm saying about the strength of all the triggers right here? It's really strong. And again, we got a lot of divergences on the lows. So, you know, if you did it, right, again, these are the ones that are a little bit questionable. And these are also the ones that you would manage a lot tighter too, if, you know, something went against you. Yeah, it's okay. Again, you know, when you start to add up your checklist, again, you don't have the strong momentum on your small triggers over here, but we did have termination, smalls roll up, divergence, pivot stop out. They all rolled up. I mean, eventually the small chart went out on that one. All right. Now, 68. When you guess, yeah, don't guess, ever guess. Now, look, would you take a trend trade over here at 68, 66? And again, I just want you to see what's going on over here on your large chart. Again, there's a big spread. This is the traditional 50-50 look, right? A real traditional 50-50 look. Let me show you guys a picture when I say 50-50. Let's see. This is the 50-50 look right here, where you're going down, but your large triggers are way above. Here, let's see if I can blow that up. And again, you don't really know for sure. So if there's no divergence, you take it. If you lose it, you lose it. If you win it, great. So this is that look right here. 50-50. No divergence. So you're going to take it. And again, this is also where, you know, if you're long at, let's just say 68, you don't really need to stop much past the reversal bar marker, right? So, you know, if you lose 12 ticks or something, that's going to be about the end of it. And again, this is another one where you would manage quickly because it's 50-50. Well, you got run over. All right. Now, with 50-50s, again, 50-50s are different. 50-50s, when they fail, you usually resume the prior trend. You guys have seen that before, right? Where you get a 50-50 short and it fails and then it resumes the trend. Anyway, this is kind of that example. Again, we'll watch and see what happens over here on our smaller charts. Again, they went a little bit further. That would have been really close to getting bumped out. Again, I drew a box in here just so you can kind of see what happened. Again, these are ones where sometimes you get stopped out on the low tick and then they go and you're like, good God, are they watching me? Right? So again, the idea of no divergence and then it going up was a good idea. This one was tough, let's just say. All right, now we have divergence. And again, we're probably going to get one more bounce up. Divergence doesn't preclude us from taking a trade if everything is going our way. Does that make sense? You know, if everything is going your way, divergence doesn't mess us up as long as the small triggers are outside the large triggers. We'll usually take another trade. And again, you know, these are, you know, this, I also had market flow signals here. I was writing this on the chart. I didn't want to confuse everybody with 3 charts on this. But there was market flow reasons why you could go long one more time. And again, now we hit resistance. So you know what that means, right? You hit resistance, no more longs until it breaks. Now, there's no divergence on the high. So again, can you get assertive with short trades? Again, we're moving more into a trend trade look now. So again, can you be more assertive with short trades if resistance holds, especially in a downtrend that hasn't reached blue Fibonacci support? Now it's easy, right? Easier to see. Again, for me, this one would have been a little bit too assertive to go short because you hadn't made down bars on your large chart yet. So that's where this one would probably be too assertive. It worked, but again, without down bars on the large chart, I think that's too aggressive. That's just me. All right, now you're going, please pull back, please pull back, please pull back, right? 66 to 73 is the window. So we just hit the bottom of it. Trend trade short. Now, it's not the strongest trigger line look on the large chart, the large triggers. But again, this is a good spot for a short trade. And then if these triggers aren't as strong on the large chart, yeah, this is where this divergence will mess with you a little more. We'll see what happens. But again, these are the ones you want to have keep going to the downside. Usually once they get going, they don't really come back. Perfect trend trade short look, right? Again, we did a lot of chart reading and a lot of analysis and a lot of areas and a lot of extra talk, but you know, there's only one little trend trade in there for that whole thing. Moving into 8 o'clock. Again, this is, I think 8 to 9 o'clock sometimes on crude oil. It's when all of the London traders are tired. All of the American traders are starting to watch their charts. And again, you know, getting a little whippy in here. Do we want to go long? Look at your large chart. Yeah. So look at your small triggers relative to your large triggers. Do you want to go long on your little chart? Not really. Triggers are way bad. So it's a hurry up and wait situation. Now, since all the triggers on the large chart are going down, well, again, look, it's that dang 8 o'clock. So pivot stop out, no triggers below it. Again, do we want to go short after a pivot stop out on our large chart when there's no triggers past it? It's a tough one. Now notice what we're in right here. I want you to see it early, guys. Tell me if you can see what it is before it happens. It's called chop. Look, you can see chop happening before chop happens, okay? It's very easy to spot. And we'll go watch it play out, but so you get these, I mean, it's basically support that's probably going to hold and resistance that's probably going to hold. Can you see what I'm saying? So we had a divergence pivot stop out. Our triggers are going up. We have resistance and pivot stop outs over here. There's a lot of things on both sides of the market that say, you know, we're probably going to get choppy in here, and then we'll end up waiting for a breakout. So watch, I'm just going to let this play through. I think it goes pretty quick, but again, you can see chop before chop happens. if you recognize it properly. And it's just recognizing that support and resistance can both hold at the same time. And you don't have to guess as to which one it's going to end up being. You can see it coming before it happens. But the idea in chop is to wait for a breakout to either trade the highs and lows, or, you know, if you're not a counter trend trader and chop, then you have to wait for a breakout and wait for something clear. So I'm going to let this run for just a minute. I'm going to take a 1 minute run around the house. I'll be right back while you guys are watching this, and then we'll pick it back up. All right, guys, I'm back. And look, that would be trading into a termination condition in chop, right? I know I put a circle there and when I was doing replay, but when you go back and look at it, you're like, oh man, I went short into chop after a pivot stop out. So that would have been a wrong trade to do. Is everybody okay with that? I put the circle on there because these are the ones where you get tempted. But pivot stop out in chop that we called early saying we need a good breakout. Is that a good breakout? I don't think so. So anyway, that's not a short just because I drew a circle there. There was a reason why I drew it there. Everybody okay with that? Again, we're still in chop and we're waiting for them to figure out, when we say them, right? All right. Now they figured it out. Does everybody agree? They figured out the chop and everything's going up. So you know what to do, right? If everything's going up, you're going to buy support, right? And again, divergence doesn't matter for us because the small triggers are so far outside of the large triggers. It's not a 50-50. That's 100% going up. Very high probability trend trade. And an easy 20-25 ticks without even blinking. All right, now look, this is where you would do a second one, right? Right at the 102, 103, and you would get straight run over. That's a really good trade at 1-to-1s and everything going up. And again, look, this is where you take 20 or 25, 30 ticks, and then you get run over and lose 12. It happens. But, you know, again, you have to see the winners. And look, the losers look exactly the same as the winners beforehand. The only difference is that the small triggers were inside of the large when you got divergence, which maybe you waited for the market flow, maybe not. But if you don't have market flow, then you were getting in and you got run over. And again, I'm not saying it's a bad trade. I just want you to recognize the chart reading difference. And that's what today's lesson is about. Notice this divergence is outside small triggers. You guys have seen this in the material, right? And then over here, you have divergence, and the small triggers are inside the large triggers. And again, I'd still probably take that trade anyway. But that's the difference where you may wait for confirmation or market flow. I'd prefer just to get run over because that's not so far out that I'd really worry about it, to be honest. Anyway, as long as you got all of your other winning trades, your one loser didn't bother you. If you miss the first one because you were just indecisive, then you only get the loser. And if you only get the loser, you kind of mess up the odds of what you're doing here, right? Anyway, food for thought. All right, we're moving forward. So here's a question. And again, I want you to think patterns. What was the pattern I told you guys about this morning earlier? It has to be a couple of things. Divergence on the 5-1, down bars on the 13-2. And then the last little piece of that pattern, which makes it work a lot better, is small triggers below the areas that you're thinking about. But look, divergence, down bars. And again, we're talking about, can you go short at 80.95? I know it's a tough visual for a lot of people because this is a lot of termination conditions, right? So again, this one is out of bounds, but for chart reading, I want you to read this chart and say 80.95 is a lot of resistance after divergence with the triggers inside and making down bars. Plus, it's an overall downtrending day, which, again, that kind of factors in. But anyway, just to highlight it for you, a square with the weaker divergence. And then again, look, we've got a lot of termination here. So again, when you don't have divergence on the low, sometimes you'll think more assertively about resistances and midbands right there. Now, I'm not saying it's the best trade because of the 13-2 chart. But do you guys understand this pattern? You'll start recognizing this pattern a lot more. Weak triggers with divergence, down bars, fibs and midbands hold. No divergence on the low on the 5-1. It usually goes down one more time. When you see it after the fact, you're like, holy crap, that's pretty cool. And now if you were waiting for a trend trade, you'd say, okay, now I'm ready to take a trend trade, right? Give me a pullback, I'll take a trend trade. Everybody okay with that? Trend trade? Anyway, where the question marks were, that's chart reading, which says it's going down. This now right there, that's your short trade right there. And it shouldn't get above 92 or 93, right? I mean, there's a lot of resistance and a hell of this is a super high probability trend trade on the checklist. Everybody agree? That's as good as they get with what we do. And again, look, nice and easy. I mean, look, from 82 down to 62, pretty easy, 20 ticks plus. Now, the question is, read your triggers right here. And again, whenever we get to a fib, we have to ask ourselves questions. How many triggers are below the fibs? Again, we're looking at the fibs and we're looking at the triggers and we're saying, there's nothing really past yet. It's a strong look on the triggers and the price bars. So again, do you want to take your 20 ticks and be happy? Do you want to try to push your luck? What do you do when you're at fibs? TTFM, take the friggin' money, wait for the next one. You never go wrong with TTFM. Nothing really says it's going up here, though. Everything is still very strong to the downside. We'll see what the market says. You would not be thinking about going long, would you? Now, what if we get divergence on the little chart? Is that going to change our mind a little bit? We'll start thinking about it a little bit differently if we get divergence and the small triggers are low inside and at the triggers, and we'll see what happens. All right, questions. You guys can interject questions at any time. I'm just kind of reading the charts and going through, which, again, I think this is as beneficial or more so than just watching live charts, because live charts go slow. This is at 10 or 15 times speed. So we have the ability to talk about stuff. And again, do we want to do one more trend trade short? Now, I'm going to stop it right here. I do. KR. Usually there's a high volume area at those assertive trades, or a white paint bar into it, or pulling back to a high volume line or a high volume area from a down signal. There's a lot of market flow things. So look, I put a question mark here. I paused it. This divergence, these triggers, do we want to go short again? And look, if you do go short, what do you have to do? Because you're going to be trading right back into 56, which is support. So if you did go short, you'd have to be very quick on your management. Everybody agree? If you went short at all, you'd have to be very quick, because you're trading right back into support after divergence. It's not the best scenario, but we'll let it play out here. Yes. Well, and look, this jumped a little bit quick here, but if you did it, notice what happened. Very quickly, it said, get the hell out of that. So again, that's one of those situations where divergence on the low told you, support's probably going to hold. It just took 2 shots at holding. They happen all day long, KR. There's a lot of them. All right. So third divergence. So look, we had divergence on the low. We made up bars on the other chart. Do we want to go long? Can we say that, it's a half decent bottom? It's not great. But can we go long over here? Right there. I'll put the question mark on it for you. Again, that's the early long, right? Where if you took an early long, a second divergence would take you out of it, right? The fib at what? 80.93 looks iffy. If you get to 80.93, you're up, 30 plus ticks. Right? Again, we're lean, look, this is a traditional, Kevin, overrun of a fib by just a little bit. Sometimes they overshoot the mark by a few ticks, and then the small chart starts to pick it back up again. Anyway, the smaller chart's going to be faster, and this is also where the high volume line trade or market flow will help you out. So there's your 80.93, Kevin. If you went long down here, you've already made 30 ticks, 25, 30 ticks. So now that 93 may actually come into play. You see the difference? 93 was probably a good target for going long if you did go long. Well, and then now we'll see what the market says about that red line. So was there divergence up here? No. So it's not a great top yet. All right. All right. Now is there divergence? So again, look, we have to ask ourselves questions. So let's pause it for a second. With this divergence up here, do we want to go long when you're really close to a 1-to-1? Right. And these are the ones that I think become medium probability trade. You know, if the 8 range is really strong, and I mean, that's the most perfect area and look for us on this chart. Would you agree? And that's about as good as an area gets. Strength of the triggers, the divergence happen outside. So, you know, again, I think you can take a shot, but you have to manage it tightly. Does that make sense? I think it's worth a shot, but, you know, you have to just manage it a little more tightly. All right, let's go back to it. Let's see what happens. And that would be getting stopped out below a pivot. And then now we say to ourselves, okay, you know, look, the divergence did indeed help the yellow 1-to-1s. So, you know, it wasn't a high probability trade because of the termination condition. Easier to see now, right? Again, these are the ones where sometimes you take them and they go. And if you take them and they fail, then you get out right away and you don't lose any money. So now, KR, that pattern again, divergence, down bars on the 13-2 chart. Can you sell resistance in here? Momentum style. That trade sets itself up a lot, doesn't it? So can you do it? 1-to-1s and fibs? Yeah. It's not high probability based on the large chart, but the termination did hold. So you have to recognize you're doing it into large triggers that are going up. So again, you know, it's one that I would think would work because of 2 reasons. The location of the small triggers relative to that area, no divergence on the bottom, a good top holding. So again, a more assertive, maybe market flow or anyway. There's a lot of benefit to selling a lot closer to the top. You know what I mean? Because if it truly is the top, you're going to make a hell of a lot more money. Now, not high probability trend trade. Mark could be tripping out on me. But you see the look, right? Divergence below everything, no divergence. It usually bounces down. At least for chart reading, it's good, right? And then you say to yourself, damn, why did I not take that short? Right? You're like, oh, man. Maybe after a second divergence, you get a second chance at it, momentum style. Anyway, all right. Now, notice this is also at 9 o'clock in the morning. This is where the day session opens for the U.S. So there's usually a lot of extra volatility in there. They ran it up so they could sell it off. Absolutely, KR, 100%. A stranded buyer-seller antenna bar. Yellow antenna is the best. All right, can we go short if fibs hold and no triggers get below on all charts? And there's divergence and the small triggers are weak. So look, I said a mouthful there. The 13-2 chart triggers are weak, plus you have fibs with divergence. Can you go short again? You can, but you'd have to be very quick with the management, right? If you did it, you'd have to be very judicious with your management, very quick. That's not a trade I would be doing personally. I don't care what happens to it. Yeah, not you either, KR. Okay. And again, everything's still strong down, so there's no reason to think about long trades, right? So you go right into, a big move down, and then you can't go long, can't go short. But we're leaning to the downside because of the trend of the day. Also notice, look, without making up bars or breaking resistances, long trades are totally out of the question. So, again, divergence from the low, multiple divergences from the low, stuck in a little range here for a second. Everybody's trying to figure out what they want to do next. So we need to break out. So there's your breakout. Breakout to the downside. Is that a trend trade? I know it's quick, but breakout to the downside, no divergence on the low, all your triggers rolled over, one trend trade short. Yes? So we were patient through all this mess for 5-6 minutes, and then finally it said, all right, time to go. And again, I just want you to think about these trades too. Sometimes these go all the way, but usually, do you see the triggers on your 13-2 chart? It is recorded. Yeah, absolutely, Tim. See how weak these triggers are over here inside of each other? This is where, you don't want to try to get 70 ticks out of a trade usually. If it goes, great, but 20 ticks is usually a really good trade when the triggers are weak. All right, one more. Somewhere in there. And then again, now notice two divergences, maybe have to start really paying attention here. See how close they get to that reversal bar marker? Not quite. Again, there's not a lot of reason to go short here, but there's damn sure no reason to go long. Double divergence, pivot stop out at the edge of fibs. Anyway, that's a tougher trade unless you have a market flow signal. And even then, you're on the wrong side. All right, so large chart wins, right? Resistance, triggers way below. We'll probably get to fib support with a pivot stop out. And then we'll see what they say when we get to this area right here. See how we have the potential for support to hold and a pivot stop out and divergence on the little chart. Those are all things that would tell you it's time to, stop thinking about short trades. Or that short trades may be short-lived. All right, so look, check it out. This divergence says that this pivot stop out is a little better. You guys have heard me say that a bunch of times now, right? This divergence solidifies this pivot stop out for the moment, and it would take a big breakout to keep going short. Now, I'm not saying it's going up with that look. I'm just saying At this moment in time, you're like, okay, now I got to stop and wait. Absolutely. And I'm not saying it's going to go up from there. I'm just saying you can't go short anymore. Absolutely. So if we get a couple divergences out of there, and then we start making up bars, we'll have to start debating. Pretty cool, right? How this divergence over here kind of solidifies this. Again, these are the ones where market flow, you know, if you had a market flow reason to go long there, you take a trade. That's a really good termination on both charts. Look, I want to show you guys something. On my little checklist, if you guys haven't had a copy, again, this is going to make a lot more sense to you now. When we're looking at my checklist, you know, and I'm talking about edge trades or some type of trade coming from the top or bottom, look, if you get all three of your charts, right, if you're using the market flow chart too. So the 13.2 says we might have a termination. The 5.1 says we might have a termination. And the market flow chart suggests termination. So this is a real good example of that. The 13.2 chart said termination. The 5.1 chart said termination after divergence. And then the market flow chart also probably said termination there. So that's where you start to get more assertive over here, right? If possible. Anyway, food for thought. Can you guys see it? Does it make more sense now, you know, my checklist, when I say these words and you can actually see it a few times? When all the charts suggest the top or bottom is true, that's the time to be more assertive. Anyway, there's a lot more money to be had in there than just trend trades. All right, I'll let this go. It's only 9:20 in the morning. This is some pretty good study work, right? And look, we didn't trade at all, did we? I mean, you know, this where I was drawing circles, you would kind of think about doing trades, but we're not really trading here, are we? All right, again, would you take another long if there was a market flow signal or something like that? Again, I wanted to point this out. You'll see it. This divergence means that this fib with the triggers below it may hold. So the first time it might be okay. The second time it's not okay. You see the difference? This divergence said this bottom was good. This divergence said this top was good. No more longs over here. Anyway, case in point. Can you guys see it now? Now that we're a little farther away from the edge, you really see it, don't you? Divergence and fibs and fibs. And anyway, no longs. There was no shorts either. So it was just a lot of movement. It wasn't ours. Well, somebody's, but it wasn't ours. All right. Questions, comments, concerns, things you guys want to go through. All right. With no divergence on the low, are you going to take another trend trade short? I think the answer has to be yes. And look, we shouldn't get above this reversal bar marker, right? So it's a really good area. You don't want to get in, get bumped out, only to watch it go. All right. Is everybody okay with that short right there? And again, this is a really, really, really strong look on your 13-2 chart to make it to the fib, which we did. Right. So once we get to the fib, we ask ourselves the same question. Where are the triggers? Are we going to stop here? We're going to keep going. Now we have another divergence on the little chart. Any ideas? Remember, what has to happen before you can really go long? You need to see up bars on the 13-2 chart, right? Or you're just going to get your butt run over trying to catch a bottom that's not going to exist. You don't want to try to catch the bottom. You want to let the bottom happen, and then you'll start to feel better about it. Now we're building a case for why the market may stop with the small chart. But at the moment, everything is still strong down on the large chart, so you can't touch long trades with a 10-foot pole. We kind of did away with that, Ray. I know you did that in the past as a test. Well, who are you dealing with? Mark Dean or Jim or no one? Hang on a second. You dealing with no one? All right. Is the email that you used in the room right? I'll look it up. All right, bear with me. Let me get this back up here. Again, I want you to see this spot right here. What do you guys see? It looks like a trend trade, right? Now, notice, can you guys see this over here? Weaker triggers plus a divergence over here. It's not the same as strong triggers with divergence on the little chart. It's weak triggers with divergence over here. All right, let's see. You know, we have people in our database going back to 2001. So you'd be surprised that anyway. All right. Here's what you do. I'll make it easy for you. Fill that out. We'll work it out. Okay. I never say no to anybody for any reason for the most part, very rarely. So, all right, let's watch what happens. Again, look, I wanted to talk about it beforehand, but you see it now, right? Weak triggers with divergence on the low. This is where this trade gets iffy. And then now this is the same pattern we were talking about. You know, we've talked about it all day, but you see it again now. I'll point it out to you. Look, divergence on the low on both charts. Price bars get beyond and make up bars over here. And then now this is the area where we were talking about again. Do we want to take a shot? So again, divergence on both lows, up bars. Do you want to be more assertive? For which type of trade? A top or bottom trade, or a trend trade? David, there's two different types of trades. So to be more specific, watch. If you're coming from a top or a bottom, you need some trigger lines to roll. If you're going to do a trend trade, you need all of the triggers to be strong. So in this situation, these triggers are, you know, they're not as strong as you would like to see for, you know, again, for the high probability trend trade. But we're talking about recognizing a bottom and recognizing divergence on both charts and recognizing a strong look over here. And now you see how we're getting a little closer over here, David, to the triggers being strong up. So now this is where the trend trade, traditional, regular old good trend trade comes in. You see it? So everything got strong, so you can take that trend trade right there, or should take it anyway. Does that make sense? And again, we have a key area here to contend with, which, you know, unless this area significantly breaks, will probably go up again. Well, that would be your management. If you did go long a second time, that would be your management. Now, I want you to look at this. And again, let's use some wisdom here, okay? Just because we had divergence and we made a down bar on our 13-2 chart, do we want to go short at resistance when we have this look over here? So we literally just hit support and our large triggers are up and our small triggers are up. You're not trying to do a momentum short over here, right? Hopefully. Whereas earlier we had, you know, a really good top with really good fibs and we were being assertive to the short side. Over here, we've got fib support. So we're not going to be assertive to the downside. Does that make sense? We're not coming off of fib resistance. And I'm not saying it can't go down, and it did, but this would be more of the trade you would do later. I had a high speed on my replay. Again, it's just not one that we would be assertive on a short trade up there. That would be your short. And then, you know, this is where your short basically, it's do or die right here and has to keep going down. All right, so now we're up to 10 o'clock in the morning. Again, do we want to go long at just a large trigger? No, not with our large chart looking like this, right? So that's not a long trade. We're not thinking long trades. It might go up, but we're not thinking long trades. We're not thinking short trades either. This is the wait. It'll work itself out. It always does. All right, so again, still in wait mode. All right, I'll pause it. Do we want to go short into a pivot stop out on the low? And that's always a question. Doesn't matter because it went anyway without us. So it's really quick right here at 10 o'clock. Like I said, it was Friday at 10. Okay. That's very fast. I hope I slow this down. All right, guys. So look, now this is the more assertive look that we really love to see. Fib support with divergence, triggers roll up. Now we should be able to go long with reckless abandon. What do you guys think? Give or take? Divergence on the low, big strong move to the upside. Everything's rolling over. The low is good. Where's the long trade going to come from? Is it going to come from 59 or 66? And again, these are the ones where you have to gauge the low and how good it was. And do you want to pay a little extra? That's just about the spot right there, right? What do you guys think? Is that about right? All right. Now, don't make down bars on the 13-2 chart. So let's say you stop a couple of ticks below that thing and they got you. That's okay. If you tried one there and you got, that's okay. Watch what happens. I want you to read your chart. Again, that's the first attempt, and maybe it didn't work out. It wasn't perfect, but that's okay. Now, more divergence potential from support. So again, if we get divergence on our little chart to help fuel the thought of this fib holding on the big chart, we'll see what happens. Does that make sense? You've seen this now before. It's not great. All right, now we have a second true divergence on our 13-2 chart. Can we say that's a better bottom? Now it's a better bottom. Now with a really good bottom, this is where, for me, I would think about being more assertive. See the mid-band and all the triggers over here? That's a better, more assertive one for me because of the good bottom. We'll see what happens. If you can say great bottom and then get more assertive, you'll be a lot happier with it. There you go, about right there. Hit the mid-band and large triggers. Again, look, this is where I want you guys to see something. If you're waiting for the small triggers to be strong up, you're not getting this trade. Does that make sense? So it's not a high probability trend trade. It's I know the bottom is in and I'm going to buy support and the trigger lines and a trend trade look, although it's not 100% perfect. Sometimes you win them, sometimes you lose them. When you win them, though, you're doing it from a lot closer to the bottom, so there's a lot more profit potential. Does that make sense? There's a lot more profit potential when you're trading from the edges than in the middle. Assuming you make it to a target, right? That's a good run right there. Now, let's look at the difference between these two. One of them was we were thinking it's going to be a bottom, and then one of them was a little more right. Remember this mid-band over here. When is this mid-band going to hold? After that divergence. I've said that before, but and again, if we took one assertively in here, it just didn't work out, and I'm okay with it. But look at the difference. Mid-band holds with divergence. You're below all your small triggers going down. That's not the best aggressive entry. After a second divergence, fibs hold, all the triggers are rolling up. Again, this is a little bit better look trigger line wise for a more assertive entry to the upside. And again, that might be your target right there. Not sure why that fib's not plotting on that, but late in a replay day, who knows? Anyway, much better look the second time to be assertive than the first time. Agreed? Anyway, all right, let's pull it back up. Anyway, termination condition. Do we want to go long one more time? Not you, all right. Again, that's always the question mark one. That's put a question mark on there, which is good. Again, those are the ones that you like, yay, I'm going to be rich, and then it gets wiped out really quick. So if you did it, you'd be more quick to manage, right? All right, so I don't know how much more I have of this here. Again, I've moved it forward a little bit so we can see if you did it, you'd have to manage out, and then that's the end of the party. let's see what else we got. I mean, obviously there's another short, you know, again, we're not going to go through any more of this. I'll post a recording of this video in here, but I think you can start to see, you know, how the small chart divergence or no divergence helps out with these 50-50s a lot. I'm going to take a 2-minute break and then I'll go through your charts from today. I'll scroll back and see how far back I can get on them. So I'm going to stop this recording for you guys to reference later if you want. I'm going to take a